Stocks trade in the green today after Nifty stamps 23,000 and advances and declines remain evenly balanced still. Telecom and capital goods are the big gainers while healthcare and FMCG drag.
Indigo ends FY24 with a profit against a loss in the previous fiscal with improved performance across parameters, riding on strong growth in passenger traffic. Brokerages stay upbeat on the stock, though some fret over valuations.
Honasa Consumer rises on strong growth and market share gains. BKG Foods perks up on PLI inclusion, and Finolex Cables jumps on a good show, but disappointments hurt Orchid Pharma, Schneider and Landmark Cars.
Want to become an institution with values like the Tatas? Mankind Pharma Managing Director Rajiv Juneja tells CNBC-TV18 he also spells out his M&A formula, shares his growth vision and clears the air on any further stake sale by promoters. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it is turning out to be a quiet day for us in terms of the frontline indices. We have the mid-cap index, which is doing better, so up around 0.3%. If you look at it on a week-to-date basis, the Nifty's picked up around 2% this week. We have the mid-cap index, which is up around 1.4%. And all of this in terms of a truncated week. Remember that Monday we were closed for trade on account of Mumbai elections. And, well, we seem to be doing well for ourselves, on a day where it is a truncated week.
Rather well for ourselves. Last Friday, if someone told you that next week there would be 23,000 in the Nifty, one would say, oh, you're kidding. But it so has happened. And FIIs yesterday bought over 4,000 crores in the cash market, covered in index futures as well. What's interesting, though, is that, despite it being flat on the frontline indices today, a lot of people would be feeling a lot happier today with their portfolios as against yesterday. Yesterday, the Nifty rallied about 400 points, but a lot of individual stocks did not see a lot of movement. But now as we speak, the mid-cap index is up around 0.4%, and a lot of stocks are surging. We have the defense pack, which is doing extremely well, then the PSU pack. So we have, names like BEL, PFC, REC, all of them spiking. AB Fashion and Retail doing well. We have GAIL, a bunch of stocks, Hindustan Aeronautics, or be it Vodafone as well. So portfolios may perhaps feel a lot better in today's trading session as against yesterday's big up move, where there would be a feeling of a bit of missing out, where the Nifty was higher, but it was led by a small bunch of stocks.
Yes, absolutely. And let's talk about specific stocks now. Finolex Cables is fired up in trade after having reported a good set of fourth quarter numbers. Upasna is here to give us the details on the performance. Upasna.
The company reported good set of numbers in its Q4 FY24. The numbers were above the street estimates. The revenue saw a growth of 14% on a YoY basis and stood around 1,400 crore, while the street was estimating a number around 1,329 crores. The revenue growth was mainly driven by growth in electrical cable segment, which contributes almost 86% of the company's overall revenues. Now, coming to this segment, the revenue saw an uptick of 16% on a YoY basis, while margins dipped 70 basis points and stood at 12.1%. It is also important to know that the share of low margin segments like communication cables also decreased from 14% to 9% on a YoY basis. Coming to company's overall EBITDA margins, they saw a downtick of 30 basis points and stood at 11.6%, while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while the street was working with a number of just about 145 crores. So all in all, we are seeing a good set of numbers reported by Finolex Cables in its Q4 FY24.
All right, Upasna, thanks a lot for that. Meanwhile, Orchid Pharma is one of the stocks which is under pressure in today's trading session, down over 8% as we speak. Fourth quarter earnings, Ekta, not too good?
Well, yes, definitely a disappointment on all fronts because the revenue grew only 3.4% on a year-on-year basis for Orchid Pharma. The margins came in at around 3.3% with the EBITDA down 27% year-on-year and the profit coming in at around 33 odd crores versus 59 crores. Q-on-Q as well. Revenue was 217 versus 220 crores and the margins came in at 13.3 versus 16% with the profit again higher, but nonetheless, the revenue is being lower on a sequential basis. So it definitely was a top-down disappointment which came in for Orchid Pharma, where there were large promises of, the cephalosporin business really ramping up for the company. So I think that's probably where the disappointment is stemming from, especially in terms of the margins. But let's now put the focus on Interglobe Aviation. Everybody is watching that stock, can't stop talking about that stock, and maybe can't stop using the services as well. We have Sonia joining in to give us the key highlights and brokerage views.
Thanks a lot for that. So the numbers were actually quite good. It was a 6th straight quarter of profitability for Interglobe Aviation. In fact, the Q4 revenues went up about 26%. EBITDA margins have improved. The profitability has gone up as well. And most of the internals are quite strong for Interglobe. So the passenger growth has come in at 14%. The load factors have improved. The yields are up almost about 7%. But brokerages have a bit of a mixed bag this time around. So Morgan Stanley has an overweight. They've raised their target price to 5,142. They say it's one of the cheapest travel-themed stocks, and any stock dip is an opportunity to buy. And the company has guided for a 10 to 12% year-on-year growth in the ASKM. However, Elara Capital has changed their rating to a sell from a reduce, and they say that there are some cautionary statements that the company has given out in their conference call. And also the stock has run up quite a bit. The stock is up almost 40% in the past 3 months because of higher airfares. So there is some amount of profit taking that you are seeing in the stock this afternoon. Back to you.
All right, Sonia, thanks a lot for that. Some bit of profit taking, but profits have been big on Interglobe Aviation itself. 35% up more in the last few months itself, as we saw, our team just alerted us the kind of big move that we've seen. And over the last 1 year itself, it's been a big, big wealth creator for investors. Strides Pharma, on the other hand, is joining us after this short break. What we'll do is take a short break, come back. The management will join us to discuss the fourth quarter earnings.
Welcome back. Well, for the markets, it's turning out to be a day of consolidation for the Nifty. So just about, remember that we did hit those levels of around 23,000 on an intraday basis, and just about hovering at those levels. So really no complaints coming in for the markets at this point in time. We have the mid-cap index, which is up around 0.3%, and the advanced decline ratio, which is largely even keel, you'd have to say. So just about 1:1 is where the advanced decline ratio is. Just watch out for a couple of stocks such as Apollo Hospitals, which is still not released numbers. So that stock is down around 1.2%. And a couple of stocks coming out with numbers such as Glenmark, Spark, all of these stocks are in focus, and ahead of that, Torrent Pharma, Glenmark lower, Spark higher, up around 3.5% for Spark. But let's continue our focus on the entire pharmaceutical space and talk about Strides Pharma. It reported what was a good set of Q4 numbers. The margins have improved to a multi-quarter high. It also reduced its net debt by over 300 odd crores in FY24. To discuss this, we have with us Arun Kumar, the Executive Chairman, Strides Pharma Science, joining in now. Mr. Kumar, welcome to the show and good to see you in as always. I wanted to start by talking about the margin improvement that the company has seen consistently. Margins now stand at around 20 odd %. What led to this improvement? Was it the US business contributing, or maybe operational efficiency? And secondly, what are you guiding for in FY25?
Thank you, Ekta, for having us. Yeah, it's been a good year for Strides in terms of its reset strategy. We completed everything that we have guided for in terms of margin expansion. So the US did contribute a large part of our margin expansion, but so also did other markets. And what is most pleasing has been that we have contained costs for the last 3 years at the same absolute dollar numbers. So that allowed us to focus on OPEX leverage and free cash. Pleasing also was that almost 90% of our EBITDA is converted to free cash generation. That led to debt reduction, and we'll continue focusing on efficiency and a steady growth in our business led by the regulated markets.
So you did briefly allude to the US. You hit about $250 million for the year. Quarterly revenue was flattish. Just wanted your thoughts on, the road to $285 to $300 million and eventually $400 million. By when do you get there? And margins, what are they likely to be going forward? Will they, continue at that 20% plus mark?
Well, it's been, we were at single digits, so we've taken 8 quarters to get to 20%, and we'll continue slowly moving up that. Our target is to get to about 22% as our EBITDA margin, which used to be our all-time highs. So that's our focus. To your point with the US, historically, Strides has a very strong flu season-led business. This year, it was not the case. The flu season was almost not there in the US, but we had some great product launches, new products, especially generic Suprep. We are market leaders on that product today. So that made up for some of the loss of sales in Q1. So actually, if you look at comparative year, we've grown about 10% on the Q on Q or on Y on Y. And based on recent approvals, including Sucralfate, which is our first Indian company to get a product in a very complex generic, we are very, very confident of getting to the 285 to 300 mark in terms of sales in the US.
Okay, all right. You're confident about that. Can you just give us a sense in terms of, the base business in the US? Is that seeing pricing pressure? I know that the flu season wasn't as good this time, but what about the base business as well as new launches? What can you guide us for?
So, Ekta, we have spoken about this earlier. Our commentary remains the same. We have this huge basket of approved products in the US, which we are not. So we have the luxury of approved products that we can launch at any time. We do not accept significant price challenge on our products. And when we do, we just let go of a product because we have this wide range of products that we can make up for sales. So for a long, long time, we've been saying that we are to a very large extent immune to pricing pressures. We do see in specific products and portfolio pricing pressures, but we continue to keep market share if the pricing is right. And if not, we are happy to let it go.
Right. What about debt? Net debt has reduced over the last 1 year. What's your plan on reducing it further, or are you comfortable at these levels?
Well, we are very comfortable at 2.7, but we have guided a further reduction of 500 crores in the financial year. So if we want to bring it under 2, that would be a very comfortable position for us to be long term, and that's our goal.
Okay, all right, fair enough. Give us a sense in terms of the OneSource listing now. Where exactly does it stand in terms of a process? When do you expect it to list? And what is the profitability of the business?
Right, so OneSource has received all necessary regulatory approvals, including the SEBI approval a couple of days ago. So we are now ready to start the NCLT filing. We expect to be filing the NCLT in the next week or so. And then it's a typical 9 to 12-month period from NCLT approvals to listing. We've guided the business to be in the range of $165 to $175 million with an EBITDA in the 30s. So we are very delighted that now we've got behind the regulatory hurdles, and now we are all set to get into a listing of OneSource, which then will make us India's first spec farm CDMO. The target is to focus 30-35% EBITDA business.
So by when? What are the timelines that we're talking about here?
So we got all approvals last week, all regulatory approvals, including SEBI. We can now file the NCLT as early as next week. And then it typically takes between 8 to 12 months, including the court process and the listing.
All right. Thanks a lot for joining in and giving us your views on the year as it looks ahead. $285 to $300 million in the US business, looking at an eventual margin target of close to around 22% with a debt reduction of almost 500 crores during this year. And maybe soon we will have the listed pet care business as well. Take a short break. On the other side, we have Sudeep Shah of SBI Securities joining in with some trading strategies to discuss the market. Welcome back. The Nifty fledgling between green and red. No real worries out there. The Nifty bank a tad better, and the mid-cap index is actually the story of the day today, barring the 23,000 headline that we had on the Nifty this morning itself. Market breadth, even as the mid-cap index is high by about 1/3%, that's not reflecting as much in the market breadth because we have the stocks at an even keel, and this is for the second day running where both the red and green lines were pretty intertwined. And if you just take a look at that right now this afternoon as well, we've seen a bit of an intertwined move on those lines once again. Let's watch out for the India VIX. Now, even as the markets moved higher, the India VIX, after cooling off to around 21, has come back to closer to 22. So that's another level that we'll have to watch out for. But I'm just looking at HDFC Bank. And why do I say that? Because yesterday I said it was at a crucial juncture. It was just below the 50, 20, 100 and 200-day moving averages, around that 1470 mark. But after the big up move yesterday, now it's above all key moving averages. It's above 50, 20, 100 and the 200-day moving average, which is at 1504. So if it can close above the 200-day moving average now, will we see the HDFC Bank get its mojo back and perhaps move higher from current levels is something that we'll have to keep an eye out on. As of now, it's crossed crucial resistance zones, and that's also perhaps a question that we'll put forth to Sudeep. In terms of the market, watch out for the 23,000 mark on the Nifty. Now looks like a bit of a fulcrum where you're seeing both put writers and call writers equally active, telling you at levels of 22,700, 22,750 there is support, but upwards of 23,200 could be some bit of resistance coming by as well. The stocks that I'm watching out for today, ABFRL, Vedanta and Biocon. Remember, these stocks keep moving in and out of F&O band, but given the kind of activity that we've seen today on all these stocks with open interest build-ups, chances are they will re-enter F&O band. For sure on Biocon and AB Fashion and Retail. Vedanta, we'll keep an eye out on how it pans out towards the end of today's trading session as well.
Okay, all right. Well, thanks, Manglam, for that. Sudeep Shah of SBI Securities now joins in. Sudeep, hi, welcome to the show. Well, what would you recommend in terms of the markets at this point in time? We're sitting at fresh record highs for the Nifty. What would your approach be towards the index as well as specific stocks?
Good afternoon, Ekta. See, the indices are currently in a strong momentum, and post that breach of the previous swing high of 22,800, we feel that the momentum has accelerated on the upside, and now going forward till this zone of 22,780, 22,800 holds, positionally this strong momentum could continue up to 23,200, 23,300 levels also, which is the upper end of the rising channel in which Nifty has been trading for quite a while now. And on the Bank Nifty front, I feel that signs of strength are coming back here, and from the current levels also till 48,400, 48,350 holds, Bank Nifty could incrementally move higher up to 49,400, 49,600 on the upside. And one specific point to make here is that if we see the long short ratio, that had seen a good improvement yesterday from the prior 30%, it has improved to 42%. So that shows that the large caps are now coming back into action, and we could see this action continuing for the next few sessions at least.
All right, and individual stocks and HDFC Bank in particular, Sudeep?
Good afternoon, Mangalam. See, HDFC Bank, if we see closely, now that stock has moved above all its crucial moving averages. It was consolidating, before yesterday for the past 8 to 9 sessions between 1440 and 1480. And yesterday's move has ensured that the stock comes back above its 20 as well as 50-day, and now it is, we feel that the next level that the stock could head up to is around 1545, 1560 on the upside. And on the downside, the supports are placed around 1480 levels.
Okay. All right, Sudeep, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals of the market. Well, we'll take a short, let's now shift focus and let's in fact have a review of all the FTSE All World Index and FTSE All Cap Index. Changes are expected to happen today itself. Vivek is here with more details on this. Vivek.
Well, what's going to happen today is that the FTSE as well as the BSE Sensex, the Index Review Committee will actually go ahead and announce which are the stocks, number one, as far as FTSE is concerned, which are the stocks that are likely to be added as far as the FTSE Index Review is concerned, and same for Sensex, there are analysts are anticipating at least a change as far as Sensex is concerned. Now, talking about FTSE, now remember, this is the June 2024 quarterly index review. In this particular review, the FTSE will actually go ahead and consider all of the recent IPOs or any spin-offs, etc. So it's a supplementary review as far as FTSE is concerned. So which are the stocks to keep an eye out for? This is as per IFL Alternative Research. These are the stocks they expect to get added into the FTSE, either the All World or the All Cap Index. The first stock on the radar would be JSW Infra. Expect flows of close to $38 million over here. Honasa around a little over $7 million. Happy Forging over $3 million. Seller World, DOMS, Inox India, IREDA as well as Tata Tech. IREDA could end up getting flows of close to $57 million and Tata Tech too quite substantial at over $34 million. Now, as far as the Sensex is concerned, remember Adani Enterprises could end up replacing Wipro in this particular Sensex review. Adani End could get flows of a little over $115 million, while Wipro could end up seeing outflows of over $56 million.
All right, Vivek, thanks a lot for that. So those are a bunch of stocks. Adani End, of course, was a big mover in yesterday's trading session and today as well, holding up mildly in the green. Take a short break, but as we do that, there's some programming note for all of us. Join us live on 31st May from 5:30 p.m. onwards for CNBC-TV18's Future Female Forward, the Leadership Circle. It's a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination and the road less traveled. This leadership circle is not just about business strategies and professional accolades. It's about delving into the depths of personal journeys of these trailblazers.
Welcome back. Well, it's been a year since homegrown pharmaceutical and consumer health company Mankind Pharma debuted on the stock exchanges. The stock has rallied over 90% since listing and has generated positive returns in 9 out of 12 months since listing. So what is Mankind Pharma's growth path going forward? What is the company's revenue target? And now that it's crossed that milestone of around 10,000 crores in FY24. To discuss all this and more, I did catch up with the Vice Chairman and MD of Mankind, Rajiv Juneja. Listen into that conversation.
We will increase our chronic share to a substantial level. 5 years back, it was 28%. This year means we have closed the year, it is 36%. In just 1 year time, we have increased 200 basis point approximately. It was 34 point something, now it is 36%. Our every action, everything is towards chronic side. And our ambition is, like any other peer, good companies, we take a lot of inspiration from. We aspire to become like them. Talk about these top 3-4 companies. We want to have more than 40% in near future, our chronic share of sales, more than 50% in long-term future. That's ambition for Mankind. Because we have learned once you go in chronic side, many advantages are there. One, the sales become consistent. You're not depending upon seasonality. Second, it is always increases your EBITDA. Profitability is more. You can do many things once you have more money in your hand. And we have done that. Look at acquisition of this Combi Hale. We never had any kind of a device, so we went for it. Again, Symbicort in license. This is a journey of last 2 years. It took us 2 years to convince Astra to give us this product in license. And I promise you, will surprise everybody. Again, you see this Nobiglar. Insulin is in chronic, very chronic. It's super specialist chronic. Again, it is product of the year launch this year. That really talks about what we talk, we do. If we say that we'll do that, we generally have done it, and rather we have done more than that.
Okay. All right. You know, what stood out to me was also your modern trade segment, which was up 50%. What does it comprise of, and are you expecting that spate of growth to continue?
Earlier, 50% 1.5 years back, we never had a modern trade division. Random stockists were just supplying to all the modern trade. And that's one reason, after making it organized, things are going from that side. And the growth you're seeing is, 50% or 60% or more than that. But going forward, it will remain, because once this base effect would come, or the base has been built, things are organized, it will always grow, but at a double digit, not like this, the way it has grown last year.
Okay. Are we going to see more in-licensing deals that you're going to undertake with larger MNCs?
Yeah, one more in-license deal we have signed at the right time. We'll just inform you. Maybe in the second quarter, we'll inform you. Things are done. Once we launch the product, we're quite conservative. We don't really speak something till we get the product in our hand. We are kind of a believer of once something is done 100%, then speak out.
Are you looking to probably rope in another investor, possible separate listing of the consumer healthcare business eventually?
Not really. This thought has not crossed us.
Okay, all right.
Crossed our mind, yeah.
Carving it out into a separately wholly owned subsidiary is only to sharpen focus. The other point of the business was the exports, which has stood out, quite dramatically. It was up 230% in Q4, up 175% for the year. It's a low base, but how big an opportunity is exports for the company? What's your strategy there? Are you going to be a US generics player?
Absolutely not, madam. We have mentioned a number of times, Ekta, that we will always be domestic-focused company. We have learned our lessons from other people's mistake. Whenever we think of export, 3-4 things are there. It should have, if we have some kind of a complex product, difficult to make product with entry barrier, where we can command fantastic growth and fantastic profits, we'll go for it. If it's just a Me Too product and it would add some kind of a sales in our revenue, not interested at all. We will always be India focused, because look around yourself, the kind of vibrancy is there in India. We are very, very bullish for India. Anything and everything we do, keeping India in mind.
Okay, all right. But how much are you expecting exports to grow? Because we do understand there are some one-off opportunities and you are looking at the ophthalmology space there. So give us a sense, at least in the near term, what is the growth rate for the exports business?
There would always be double-digit growth. The kind of growth you have seen, we don't predict that, but there would be nice growth. And if one of opportunities, I cannot predict about that, how long it will remain with us. But whatever things are there to take the profits, we can take that. But our focus is always domestic side, consumer side, chronic side, not export side. So 90% plus, but we will always be India-focused company.
All right, interesting conversation there with the management of Mankind Pharma. What we'll do is we'll take a short break, come back, focus on a lot of these individual stocks which are buzzing around on account of their numbers. Case in point, something like a Honasa or even Bikaji for that matter, up around 5%. Come back, we'll talk more about it.
Welcome back. Well, let's talk about some companies now. Bikaji Foods is surging. It's up around 5% The company reported what was a stable set of fourth quarter numbers. Manglam, always interesting to see takeaways from companies such as Bikaji. Tell us more about it.
So the biggest takeaway is the fact that, a lot of people are snacking. Secondly, the unorganized space is getting into organized. And thirdly, they themselves are, increasing their geographies in what they're present. So they're increasing their distribution, increasing the states that they're focusing on. And as a result of which, growth is a lot higher than that of the industry that we've seen. Additionally, this time around, they've also been boosted. The numbers have been boosted by the PLI income that they got, which was close to around 94 crores. No mean feat out there because, that adds almost 100 crores to their bottom line. But even if you strip that off, there is an underlying volume growth of 14.3%, which is good. Apart from that, we have revenue from operations, which grew by about 12.8%. EBITDA grew by about 10%, so no problems on the operational front as well, with margins around that 13% mark. And the net profit grew about 22%. Importantly, the ethnic snacks, they grew about 11%, and that accounts for nearly 3/4 of their revenue. We have packaged sweets, which grew about 13% as well. Western snacks and on a low base, papad also grew by about 24%. So good numbers coming in, give or take, everything. The kind of weakness that we're seeing in the consumer sentiment. There are some of these companies which are smaller in size, but growing much fast because of the headroom that they have, are reporting higher than industry growth, and as a result of which we are seeing the up move in the stock. In fact, I'll take that forward with Honasa as well. On an overall basis, as compared to the industry, their size is a lot smaller, but because it is a lot smaller, they're growing a lot faster. They're growing 3 times that of competition. And in an industry which is parched for growth right now, any company that grows faster, the street rewards that. Underlying volume growth of 27% is as well very good. They've seen a revenue growth of 21%. The EBITDA, because again, it was a smaller company growing a lot faster, they had to invest on advertising, etc. Revenue growth will now kick in their margins as well as operating leverage comes by. So their EBITDA has come in at 33 crores versus a loss of about 3 crores. And that's flown down all the way to the bottom line, 30 crore net profit versus a loss of 16 odd crores as well. The key internals, they are not only growing faster than the competition, they're gaining market share in products that are doing well for them as well. 120 basis points gain in market share for face wash, about 40 basis points improvement in market share for shampoo. They've increased their physical presence by about 34%, and also 18% of their revenue now comes in from newer launch products. So that's telling you that the company's base in terms of revenue is diversifying. They've given targets for the next 3 to 5 years for their key brands other than Mamaearth as well. Dermaco, 1,000 crores. This had recently crossed 500 crores. Aqualogica and Dr. Sheth's about 500 crores. And B Blunt, which they acquired from Godrej just before listing, they have a target of around 250 crores as well. And additionally, they've also identified and acquired R&D capabilities by buying Cosmogenesis Lab, because this will help the company, improve their back end when it comes to formulations, R&D and nano manufacturing.
Okay, all right, Manglam, thanks very much for that. So that's on Honasa Consumer. But let's focus on our special segment now. Fin Street, Abhishek puts the focus on microfinance lenders. Over to you, Abhishek.
High inflation isn't a friend for the rural economy, and this is leading to pain in the rural sector, which has become visible over the past 2 quarters in the asset quality of lenders who are actually focused in the microfinance segment. And it's also showing up in the loan growth rate, which has declined in H2 FY24 versus the growth that they had in H2 FY23. Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. This is surprising, as H2 is usually a better half for the microfinance lenders. For 70% of the lenders, the gross NPA has increased anywhere between 22% to 124% in H2 FY24. ESAF SFB, their gross NPA increased by 124% in second half of FY24. Credit Access Grameen, a top-notch microfinance player, saw its gross NPA rise by more than 83% in second half of FY24. The rise in H2 FY24 NPAs compares to a decline in gross NPA for most of the lenders in H2 FY23, like Suryodaya Small Finance Bank and ESA Small Finance Bank. They saw their gross NPA decline by more than 60% in H2 FY23 versus the number of H1 FY23. Credit Access Grameen too saw a sharp dip in its gross NPA by 34% in second half of FY23. Rise in NPAs has impacted the credit cost of the lenders, and provisions have increased sharply for majority of them. Provisions increased by 8.5% in H2 FY24 when compared to the number of H1 FY24. Largely in Q4 FY24, majority of the provisions have come in. Ujjivan Small Finance Bank provisions have increased by more than 94% in H2 FY24. ESAF Small Finance Bank, their provisions have increased more than 59% in second half of FY24. In H2 FY23, provisions for lenders has actually declined by more than 38% when compared to the number of H1 FY23. Satin Credit Care, Spandana Spurti had seen their provisions decline by more than 60% in second half of FY23. AUM growth rate has slowed down as well in H2 FY24 versus the growth rate that they had in H2 FY23. So H2 FY24 AUM growth of the lenders has been about 16.3% when compared to H1 number, and they had a growth rate of 22.8% in H2 FY23 versus the H1 of FY23. So growth rate has been impacted the most for Spandana Spurti, ESAF SFB and Equitas Small Finance Bank. The key takeaways are that high inflation and elevated interest rate may continue to impact the repayment in the microfinance loans. Some lenders are also showing high disbursements but lower loan growth, suggesting repayment issues. Hence, loan growth rate has started to slow down for majority of the lenders in the microfinance segment. Given this, pain in the asset quality can continue in the near future for small ticket loans.
Okay, all right, Abhishek, thanks very much for that. So that's on the entire banking space. But let's move forward now. Hindalco will be releasing its Q4 numbers. Nigel is here with the key expectations. Nigel.
Well, that's right. For Hindalco, we already have the Novelis numbers, which were quite good, and the guidance as well is very good out there. So what we're looking at in these Hindalco numbers is the standalone numbers. Now, just to tell our viewers, the first look at it, don't just go by the standalone numbers, because the Utkal alumina business is not part of the standalone business. So the way to look at it is Utkal plus the India business. So let's run you through the main numbers that you should be looking at. Well, so, the poll number that we are throwing up is the total India EBITDA number. That should come in at around 2,850 crores, very, very roughly. The number comes up for you on the screen. And this is split up into the aluminium business. The aluminium business consists of the Indian aluminium business, and also it consists of the alumina business. So put that together, you're working with a number of around 2,200 crores. And the copper business, well, it will be stable at around that 600, 650 crores odd. What are the factors on play? Well, for the aluminium business, volumes will be more or less flattish, maybe mildly higher, but they'll gain because they have close to around 20-22% of their total sales that are hedged, and that number is hedged at a higher price. So they won't bear the the decline that we saw in the past quarter. That's point number one. The other factor that plays out for them is on the cost side. E-auction coal, well, it did see a sharp decline, and they're getting a fair bit of their coal from the e-auction coal as well. So the cost of production for the aluminium business will fall. And for the alumina business, we'll have to track how much of the alumina that they produce is used in-house, and some part of that will be sold in the external market, which will help their profitability as well. For the copper business, it's aided by stable TCRC margins, and also we'll see some higher volumes coming out of there. So those are the factors that play. Keep an eye out on these three numbers. That's the 2,850 crores for the total India business, 2,200 crores for aluminium, as well as for copper, around 600, 650 crores. What else we'll track? The management commentary on how they want to reduce debt, their capex plans as well. Why are they doing this Novelis IPO? And where do they see the aluminium prices stabilizing at? I guess in the next 60 to 90 minutes, we'll have the numbers with us. Back to you.
All right, Nigel, next 60 to 90 minutes is something that we'll keep an eye out on. So that's about Hindalco. Take a short break, come back on the other side. We will be joined by Manisha, who will take us through all things commodities.
Welcome back, and joining us on the show now is Avinash Shekhar. He's co-founder and CEO at Pi42. Avinash, hi, good to have you. And a couple of positive developments that we've seen come in from US. One, of course, is the House of Representatives passing the bill to create new legal framework for digital currencies. What is the impact of that? How do you see this? As most of the globe now seems to be making a legal framework around digital currencies, what does it really mean?
Yeah. So actually, overall, I think obviously it's a positive news. What's happening worldwide is that regulators are really trying to understand crypto, pushing towards regulations, pushing towards, I think, two main things. One is enabling innovation, and second is that at the same time, let's say, customer protection and putting AML checks in place. So overall, taking a balanced view, I think another thing which has happened actually recently is that the Senate has passed a resolution saying that there were some restrictions on banks to support crypto that they have removed. So overall, I think US and worldwide regulators are going in the right direction in terms of enabling innovation in this space.
Avinash, also the other positive has been that SEC, even as there have been some warnings with the House of Representatives passing this, but they themselves seem to have cleared the Ethereum ETF as well. I mean, of course, you have to take an approval before you start launching it. Is the reason perhaps we haven't seen the prices move as much? But what does this also mean? And would you say that this is not just now about procedural delays that we might see with Ether ETF also coming in?
Yeah. So you're right. Actually, if you look at overall what's happening is that on one hand, there are certain concerns which SEC has in India. Some of the regulators have those concerns. But at the same time, they're moving ahead. They're saying that, okay, we have to keep track of these concerns because any new technology will have certain things which people will not understand or it will take time to get clear. But we can't stop innovation just for that. We have to continue the innovation. We have to continue to support entrepreneurs. And that is, I think, overall what is happening in the US ecosystem and in other countries. Hopefully, it will happen in India also soon. But yeah, overall, I think there is more and more acceptance of crypto, which we are seeing.
Avinash, I also want to come back on the Ether ETF yet again because it was January 11th when we had the Bitcoin spot ETF approval come in, and we've seen billions of dollars flow into that one since then. If I look at the latest numbers, the net inflows right now stand at $12 billion. So that's a huge amount, huge chunk of money. And similar funds also seem to have applied for the Ether ETF. How soon, how much, and until when do you see those approvals coming across?
Yes, I think it's just a matter of time now, in my view. And what we have to understand is that Bitcoin ETF and Ethereum ETF, they're not like something in the similar lines, so to say. Bitcoin is very, very different than Ethereum. So in a way, it is like Bitcoin is more decentralized. Ethereum is like a computer of the world. Okay, so it is not like that you are actually like they are not like same category of things. Okay, so Ethereum ETF in that sense is much more important because it paves ways to other crypto ETF getting approved or at least getting same kind of hearing or same kind of validation from the regulator. So I think it's in my view, it's a bigger event than Bitcoin ETF getting approved.
I get your point on that one. Well, yes, Ether will pave way for various other altcoins as well. And as you said, it does push innovation in that sense. I want to talk about Indian markets right now. And for the last few years now, the only thing that we've been talking about is the higher taxes. But within that as well, have you seen the participation come back into these exchanges as far as trading of crypto is concerned? And then, of course, there are the number of creators that India has, the developers that India has, the startups that are in India when it comes to digital currencies and the ones that have gone out of India as well. What is the scenario looking like right now?
So basically, volumes have increased in the exchange. There is no doubt about it, but it has not increased in commensurate with what we have seen internationally in terms of increase in volumes, increase in participation. And obviously, higher taxation is one reason for that. Another thing is that because of, let's say, lack of clarity on terms of regulations. I think for me, the bigger problem is that people who are innovating, okay, and people who went outside India, there is no clarity for them. And that trend continues, so to say. Because if, let's say, you develop a product, you develop, let's say, another Ethereum or something really big, there is no clarity as to how those people or those entrepreneurs will be treated 2 years, 3 years, 4 years down the line. Okay, and that risk is something which is not many people ready to take. And obviously, if you have an option to go out and do it, then doing that in India becomes more and more risky. You'll rather focus on developing the product rather than, let's say, figuring out how the regulatory challenge will work. So that is still there, I think. And as a society, I think we have to move really, really fast on this front.
All right. Avinash, one final question then. If you look at the kind of newer products, as you talked about, in sense of innovations there. I mean, we do understand that Ether is also known for staking. We also have NFTs, which have started to do reasonably well after that boom and then that very sharp decline as well. So when you look at the overall crypto as a space, or digital currencies or virtual digital assets for that matter, various ways on how it's called in India, what is your sense on where are we standing right now? Would you say that a bottom has been made from here? And what is your outlook for the rest of 2024?
I think we have just started on this in this sector. We are like still very early. Very long way to go, both in terms of innovation and regulation. I am really bullish on this entire sector. I think I've told before also that I think it's like one of the biggest innovation of our times, basically.
All right. And various regulations is something that the street is anticipating. Avinash, thank you so much for joining us. So, well, US seems to be doing quite a bit, Mangalam, but Indian market's still waiting.
Indian market's still waiting as always, right? We'll keep an eye out on that one as it pans out. But more, also just watch out for Aegis Logistics. Reported numbers, as Manisha was having this conversation, while the revenues have declined, we've seen a sharp margin expansion, and as a result of which the net profit has actually seen a big up move of nearly 39%. Remember, the revenue for Aegis Logistics, part of it is also a function of gas prices. And over the last 1 year or so, we've seen a decline in gas prices. So which is why, on an absolute basis, the number has declined. But that results in better margins for them. That's largely because a large part of, their earnings are fixed as well. So with the gas prices declining, the revenue goes lower, the EBITDA grows higher, and margins have turned from 9.5% to 16.7%. In fact, over the last 3 months or so in particular, ever since there was an initiating coverage coming in from IIFL Securities on Aegis Logistics, the stock has been on a tear. Their target price was close to around 500 rupees. The stock has done 675 in a matter of just 2 months. So that's about individual stocks. We take a short break, come back. We have the team of Business Lunch taking market action forward with you.